Hello everyone, welcome to my channel. In today's video, we are going to learn the introduction and basic concepts of income tax. In this video, we will understand the meaning of income tax, its history in India, and some important basic concepts. First, let us understand the meaning of income tax. Income tax is a direct tax imposed by the government on the income earned by individuals, firms, companies, and other taxpayers. It is called a direct tax because the burden of paying tax cannot be transferred to another person. The person who earns the income is responsible for paying the tax. The main purpose of income tax is to generate revenue for the government, which is used for public welfare, infrastructure, education, healthcare, and other development activities. Now, let's look at the history of income tax in India. Income tax was first introduced in 1860 by Sir James Wilson during the British rule to meet the financial needs after the revolt of 1857. The first Income Tax Act came into existence in 1886. Later, the Income Tax Act of 1918 was introduced, but it remained in force only for a short period of time. It was replaced by the Income Tax Act 1922, which became the main law governing income tax for several years. Finally, the Income Tax Act 1961 was enacted and came into force on 1st April 1962. Every year, the Finance Act introduces amendments and the latest changes are incorporated into the Income Tax Act. To understand income tax properly, we must first learn five important basic concepts. They are assessment year, previous year, assessee, person, and income. Assessment year means the period of 12 months beginning on 1st April and ending on 31st March of the next year. During this year, the income earned in the previous year is assessed and taxed. For example, if income is earned during the financial year 2025 to 2026, it will be assessed in the assessment year 2026 to 27. So, remember this simple point. Income is earned in the previous year, but it will be taxed only in the assessment year. Now, previous year. Previous year means the financial year in which income is actually earned. It is also a period of 12 months which will start from 1st April to 31st March and it will immediately precede the assessment year. For example, income earned during 2025 to 2026 is the previous year, while it is assessed in the year 2026 to 2027, which will be the assessment year. Now, let's understand the terms assessee and person. An assessee is a person who is liable to pay tax or any other amount under the Income Tax Act 1961. Every assessee is a person, but every person may not necessarily be an assessee. So, according to section 2 of 31, the term person includes an individual, a Hindu undivided family, a company, a firm, an association of persons, a local authority, and every artificial judicial person. These are the different categories recognized under the Income Tax Act. So now let's understand the meaning of income. Income means the amount of money earned by a person from various sources during the previous year. According to Income Tax Act 1961, income includes all the receipts that are chargeable to tax unless they are specifically exempted under the Act. Income can be earned in different ways. So these are further classified into 5 heads which are listed as follows. The first classification is income from salary. This will include salary, wages, bonus, pension, and allowances and some other benefits usually received by an employee from an employer. And the second classification is house property. This refers to the rental income which are usually earned from owning a house, building, or other property. And third one is profits and gains of business or profession. This will include the income which I earn while running a business or practicing a profession such as a lawyer, chartered accountant, doctor, etc. The fourth source is capital gains. These usually arises when a capital asset such as land, building, or shares, etc. are sold for profit. And finally, the fifth source of income is income from other sources. This will include bank interest, lottery winnings, dividends, etc., which are not covered under the previous four heads. Therefore, every taxpayer must calculate income under these five heads to determine the net tax payable. I hope this video helped you understand the topic very clearly. If you found it useful, please like, share and subscribe to my YouTube channel. Thank you for watching. See you in the next video.